Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, June 20th, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading, we had establishment of that first time frame downtrend with a very bearish candle, and today we've seen the sellers increase the momentum that they found for the previous day's trading. We've also seen the sellers open up a window or a gap here in the market, and windows in candlestick charting are very, very important, and they tend to be areas of support or resistance. And this will be a strong barrier to this market if it does attempt to rally. And we see here previously another small window that's opened up. So we're getting a few series of gaps here in this market, which is rather unusual, and we've had them close by within the space of a week or two of each other. And it does suggest some very strong sentiment in this market. Firstly, to the upside here from the buyers creating a gap, and then today from the sellers. And it does tell us that we are seeing very emotional trading at the moment, and does suggest that this market may be trading near a high, and we could see the market retrace substantially, but we don't preempt the market. But what we need to do is watch this gap and react to the price action. If it is trading around there, there is a good possibility of it holding as very, very strong resistance. So as this market moves throughout the next week or so, we can see that this dynamic level of resistance, the cloud here, will actually move higher and will move up to meet the window, and it will strengthen the area of resistance around the 1626 level. Now, the market may not even be trading near there at that point in time. It could be trading much lower, it could be trading a fair bit higher, but we do need to bear that in mind. And that's the beauty of Ichimoku charts, where the Ichimoku indicators can give us a forward indication of potentially strong support or resistance. Now, in terms of this current candle, very large black body, the size of the body has increased substantially on the previous day's trading, so the sellers have made a substantial amount of net bearish progress on the day between the open and the close, so they're finding very solid downside momentum. We've also had the market open at the high and close down towards the low, so the sellers have closed with very, very strong control of this market, and they've been committed to taking this market lower for the entire trading day. And that does suggest strength from the sellers and weakness from the buyers. Now, the important thing here is too that the market took out the important 1600 level of potential support, previous resistance, and we saw here as the market traded to there and was rejected from there. Today we've taken it out in a bearish manner, and it does suggest that there is a good possibility of this market being destined for lower levels. So the short-term dynamics in this market are not favouring the buyers at all. The sellers are totally in control. The only problem here is that when we see such volatile activity, and as we've seen here with such a very big range and a very big body, black body in this candle, the sellers may need to take a bit of a rest, and we could see some buying coming in. Now, the market will be interacting very soon with the bottom of the cloud, and that could be the area that we do see the buyers come in, or even around this 1576 level just below. Very, very strong area of potential support around there. Now, the problem here is though that if the market does attempt to rally, if we do sell off, then we have this 1600 level that may offer itself as resistance now, and we know that support can turn into resistance. So the market may need to find some solid momentum to trade up above there, but the market will also need to find some good momentum to trade above the top of the cloud, and that will has potential to act as very, very solid resistance for this market. Now, in terms of the Fibonacci extension, yesterday we examined the relationship of that new first time frame downtrend that the market was in to the previous downtrend, and here today we've seen the market take out the important 100% level in a very bearish manner, trading exactly to the 161.8% level at 1588. There is a possibility of the market rallying from here. It is an important level, but really this candle as it's developed today is giving no hint of the buyers finding any strength in this market, and the suggestion is that if the market can break through the bottom of the cloud, we could see the market trading to the 261.8% level down around 1547. In In terms of the Fibonacci retracement here today, we saw the market take out the 61.8% level, a very important level. Previous day's trading, we traded in a bearish manner through the 50%. It did suggest that the market could trade to lower levels, and that's what we've seen. We took out the 100% in a bearish manner, and the market will interact with the 161.8% level over the next trading day, and this strengthens the amount of potential support that we may see tomorrow just around or below the cloud. That 161.8% level is at 1579, so if we do see buying coming in, there's a possibility of that. We could see the market potentially change trend over the next day or two. If the market does trade in a bearish manner down through there, we have a target at the 261.8% at 1533. Now, in terms of Ichimoku, quite a change in sentiment in this market today. The market is now trading within the cloud. Previously, we had that breakout up above the cloud, and it was a very, very strong buy signal quite some time ago, and we have seen the market appreciate substantially over that period of time since the breakout. Now, time to close that type of trade if anyone had a trade based on the breakout above or below the cloud. But here now we have a neutral market in big picture terms, whereas it was bullish prior to this trading. We've now seen a strong change in sentiment, and the market needs to make its mind up if it will be trading it back up above the cloud or down below. If we do see the breakout down below the cloud, that it will be a potential sell signal in Ichimoku, and there is a possibility of the market trading substantially lower if we do see that. What I'd like to see is a solid bearish breakout and a bearish close down below the bottom of the cloud to give us a lot more confidence in the potential for the market to trade to lower levels. In terms of the Kijun-sen and Tenkan-sen, the market is now trading well below both of those indicators, and here we have the pink line here, so the market is bearish in the medium-term time frame and bearish in the short-term time frame by trading below the Tenkan-sen, the green line here. The angle of those lines has started to point down fairly sharply, and it does suggest that there is some solid downside momentum in this market as well. So now that the market has found solid downside momentum, it could be building that momentum to break out down below the cloud and test to lower levels. If the market does rally, obviously I've already mentioned the 1600 level, but the market will interact with the Kijun-sen and Tenkan-sen if we can trade above the window. And the Tenkan-sen, now that we have solid downside momentum, has potential to offer itself as strong resistance, and that's trading around the 1619 area. So we do have very, very solid barriers to this market appreciating. So let's bear in mind that if the buyers do attempt to come back in, they will need to find some very, very solid momentum to trade this market back up above the cloud. Looking just here at what's happened in the past in these zones of resistance, we can see the very strong price rejection as evidenced by the shadows here and previous support here, and then the resistance offered in these zones. It has been very, very strong, very large areas of resistance, and it will continue to be a barrier to this market if it does trade higher. But really tomorrow our focus needs to be around the bottom of the cloud and around this 1576 level. If we do see solid bearish activity down below there, we could quickly see the market trading to 1555, but as I've mentioned, the barriers above this market are very, very strong and may limit the potential upside.